Real simple to see. 2017 up 21%, 2018 down 4, 2019 up 31, up 18, and then up 28%. These are historical type returns.
Is the mother of all stock market corrections coming? This is one of the most important questions I see at the end of 2021, mostly on social media, especially YouTube. I experienced the longest bull run in my life. And for my feeling, when we just not think about 2018, this bull run lasted since 2009. Last year, we had a small correction, but the stock market recovered very quickly and brought tremendous returns to equity owners. Like Cathie Wood's ARK fund, who had with her flagship fund, ARK Innovation, about 150% return in a single year. Can this development last forever? Shouldn't there be a stock market correction, a huge one at the point in time? And shouldn't we go back to normal also on the stock market? My personal opinion is it is highly unlikely. And Anthony Pompliano has put together a very interesting 5-minute video tackling exactly this problem and looking at it from all different angles. Anthony Pompliano is a cryptocurrency influencer, great guy, expertise in stock market investments and crypto investments is given in his life. Watch the video and check out the channel of Anthony Pompliano. Enjoy the show.
The stock market is absolutely bonkers. In 70 days of the 249 trading days of the year, we've hit an all-time high. That's right, the S&P 500 keeps hitting all-time high after all-time high after all-time high. Why? It's because the market is completely manipulated. There is no rationality to what we're seeing happen here. So when we go ahead and we look at the actual performance, 70 of the 249 trading days so far this year, S&P 500 all-time high. That is 28% of all trading days. We have hit an all-time high. Literally, 1 out of every 4 days or so, all-time high, all-time high, all-time high. This is insane. We go ahead and we look at it on a chart. There's little dips along the way, but baby, oh baby, oh baby, we are just going up and to the right, and nobody can stop us. If we go ahead and we look historically at the actual stock market performance, what we can see here, Charlie Bolillo coming in hot with the actual charts, you can see that in 1929, there was 45 trading days where we hit an all-time high. And then from 1930 until 1953, we did not hit another all-time high. From 1930 to 1953, 23 years straight, no all-time highs in the S&P 500. And then again, we had stretches like in 1974 to 1979 or 2001 until 2007. There was no all-time highs. So there have been these record levels of no all-time highs. At the same time, there have been times where there are all-time highs year after year after year after year. Like in 1989 until 2000, every single year for 11 years, we hit all-time highs. Well, every single year since 2013, we have hit an all-time high. In fact, in 2017, we had 62 all-time highs. In 2021, we now, just today, hit number 70. 70 times this year, we've hit an all-time high. The most that we've ever hit outside of 1995. In 1995, we hit 77 all-time highs. So since 1929 until today, this year, we have hit the second most all-time highs in the S&P 500 in history, or until 1929. That is absolutely bonkers when you start to look at it. And so the last 5 years of the S&P 500 returns here from Ben Carlson is real simple to see. 2017 up 21%, 2018 down 4, 2019 up 31, up 18, and then up 28%. These are historical type returns. We're basically one bad year from the late 1990s dot-com run. What you saw, 95 up 37, 96 up 22, 97 up 33, 98 up 28, and 1999 was up 20%. Stocks only go up. Why do stocks only go up? It's because we have intervention in the market. There is no free market. We have the central banks and politicians continue to stick their little sticky fingers into the market. They continue to manipulate interest rates lower, and they continue to print and print and print. They stick liquidity in every exotic corner of the market. They simply have outlawed bear markets and they have banned market corrections. If stocks look like they're going to start to fall, all of a sudden, here comes the monetary stimulus. We have a society that is completely addicted to monetary stimulus. If they stop, the market will crash and people will lose a lot of money. If they raise interest rates too quickly or too severely, we will actually bankrupt the United States. We won't be able to service our debt. And so ultimately what we have is central bankers and politicians that are backed in a corner. They can't stop with the monetary debasement. They have to keep interest rates artificially low. They have to continue the quantitative easing programs. And therefore, what they are doing is they are devaluing the currency. When you devalue the currency, you pump asset prices higher. And so stocks literally cannot go down for long periods of time because the currency will only continue to be devalued. We can go all the way back to middle school math with fractions. Literally, it is a fraction. You have an asset and it is denominated in a currency. If you devalue the currency, then the price of that asset continues to go up. It's simple math, and stocks will never, ever, ever go down for long periods of time because the currency will never stop being devalued.